Good morning and good afternoon, everyone. This is Brad Blosser with the Core Group, and today we have Troy Hammond and Steve Zimmerman from North American, which is a fantastic company and partner. They're well positioned in this unique marketplace. And today we're going to talk about a platform that all of you have clients that have assets that are underperforming, CDs, money you are not managing. And without further ado, the title of this webinar is Bringing Sideline Assets Back to Life. Troy and Steve, it's all yours.
Hey, Brad, thank you so much. Hey, good morning and good afternoon, everybody. Thank you for spending a few minutes of your day with us. My name is Steve Zimmerman. You can see Troy Hammond and myself. We thought it would be fun if we'd put our video on just to make a little extra effort. We are your go-to people at North American. We work closely with Core. We've worked with them for years. We're thrilled about this. So the purpose of today's call is to give you some information and some ideas on some things that will affect many of your clients. We're going to talk about some ideas that we'll share with business building. We're not going to talk a lot about product, but we're going to talk about the economy, the markets, business opportunities, and hopefully you'll leave with some very specific thoughts on some sales opportunities, who to talk to them about, and the places we can go from there. So I'd like to just start with, and we love this one, it's superheroes. So I think every one of us on the call has the potential to be superheroes. We don't have magical powers, but we're doing things for people. Your role as a financial advisor has never been more important than it is today. If you just think about it, think about the current environment. We're seeing stuff we've never seen before. We're in unprecedented times. I mean, you hear that all the time, but it's like we have market volatility we've never seen. We have an economic climate we've never seen. And when you pair that with client need, they need you more than ever before. The advisors that have insurance-based wealth management solutions are at a distinct advantage today. So we're going to walk you through some planning opportunities. We're going to talk a little bit about tax. We're going to lift the hood on some life insurance solutions, and we're going to give you a clear look at that. So before we just jump in, let's set the stage. This is probably an idea, and I'll paint the demographic picture. The clients today think about maybe 55 to 75. What's on their mind? You're going to hear this every day, I bet. A, I'm worried about my money. I'm worried about living too long. Am I going to outlive my money? I'm worried about market corrections and volatility. You know what? I got through '08. I'm not sure I can do it again at this stage of the game. People are sitting, they're afraid of market volatility. I mean, if you saw in March, we had the largest single up day and the largest single down day in the Dow in the history since the 1800s. Clients are sitting with assets in cash on the sideline because they're more concerned about the return of their principal than the return on their principal. So that's probably not a real provocative statement. Clients are also worried about health issues, long-term care, chronic issues. We deal with that all the time. But what about critical illness, cancer, stroke, heart attack? These days, we're seeing that those expenses, those can wipe out people. And I unfortunately had that where I had that in my family. I saw that firsthand. And then the third leg in the stool that, your clients are probably thinking about is, I've got these people that come around my house in December at Christmas time. It's my kids, it's my grandkids. They eat everything. They leave with a mess in the place. I love it. And I'd like to do something for them. But the issue these days is a lot of your clients really don't want to give away the assets. I want to have my cake and eat it too. So we're going to walk you through some solutions today where we can address every one of those concerns and put you in a position with a better solution for your client. And where we talked about bringing sideline assets back to life, we're talking about that client 50 to 70, and maybe they're sitting with some money at Bank of America, Wells Fargo, it's in a CD, it's in a money market. They're getting ridiculously low returns, but they're thinking, I just don't know what to do with the money. I don't want to lose it. So that's what we're going to do. So, hey, Troy, I think what I'd like to do is I'm going to hand it over to you. Guys, we have a new product. It's called Smart Builder. We're going to minimize, as I said, talking product because that's not why you're here. We're going to use the product, though, as a platform to tell you the story of how we can do the planning with the clients. We're going to discuss the ways we use it that translates into the conversations you can have with your clients. So, hey, Troy, why don't you take it over and maybe walk through the next couple pages on product?
Yeah, thanks, Steve, and thanks to everyone.
Guys, one thing I forgot to mention, if you have questions, there's a chat box. You can enter your questions, and these guys will answer them on the fly.
Yeah, thanks, Brad. We're getting a ton of responses on this product, especially with Steve's great opening about the interest rate environment. So we do get a lot of questions. It's a really unique design when we do design this product. So yeah, like Brad said, if there's any questions, by all means, we'll address those as well. So what we have on our screen, and well opened by Steve, just given the current environment of the economy and whatnot, the agenda we have today is kind of the key features. We're going to go over we'll talk a little bit about the product. Like Steve said, we kind of like to have fun with this. We got the webcams going on. I might have one of my younger kids walk in the back, but we want to have fun with this. But at the end of the day, bring you really a unique product in this industry. And we don't talk product much, but with any car, right, you got to pop the engine. You got to have an engine. You got to pop the hood and have an engine underneath. So that's the product, the Smart Builder. So we'll talk about the key features of the product. We'll give you some sales ideas that'll help make you some money, and then we'll give you some next steps in the wrap-up. So the key features, number one, the product. Okay, this is called the Smart Builder. So we look at it as clients' smart money, kind of like Steve said, unemployed assets, rainy day funds. We could look at bank accounts, the bank channel, money market accounts, CDs, low interest, old annuities. So what we're wanting to do is the features on it is we're leveraging that single premium into a larger legacy. And that's a unique thing about this product is you can dial the death benefit to nearly as low as you want, given the premium going in, or to higher levels, depending on the client's situation. With liquidity to boot, that is the big thing on this product is there's 0% premium load on the product. And then we also have a 0% surrender charge rider called the waiver of surrender charge rider. So with those two combined, you're giving the client 100% access and 100% liquidity to that product. Plus, right, don't forget the living benefits. We call it the CCT, the critical, the chronic, and the terminal. Okay, those are automatically included on the policy with no upfront cost. And like I said, the waiver surrender charge, just those key features, those are the top two, the surrender charge and also the living benefits. It's an IUL, so we have availability through loans or withdrawals where the client can access money. And we also added the return of premium death benefit option, which is just another option from level to increasing with all of our products. We have that ROP on there as well. So there's three different death benefit options you can choose on this product. And then with all of our products, when we revamp them to be compliant with the 2017 CSO tables, going into 2020, like every company did, we lowered our surrender charge period on a lot of our products from the 14 to 15-year mark. They're now a 10-year surrender charge. Remember, though, if you're utilizing the waiver of surrender charge rider, you do not have any surrender charges. So with that, I'll kind of kick it over to Steve and start kind of with the sales ideas, kind of where we're going to help you make some money today and really put this into work, if you will.
Okay. Hey, great. Thanks, Troy. Hey, so we like to call the sale smart money. And if you think about it, put it in context. Does everybody have a smartphone? You do. Does everybody have a smart TV? Many of us do. That's where we're binge watching Netflix right now. So if you think about it, then go to smart money. What is smart money? Smart money is a way to utilize the dollars and get multiple benefits out of it and still preserve the utility that you desire. So what we're looking at here is if you think about liquidity, leverage, and legacy, your clients may be sitting on those sideline dollars. They've got those, as I said, the CDs, the money markets at the bank or other places. And what do they have it there for? You know what? I don't want to lose this money. The markets scare the heck out of me. I'm not happy with getting, basis points and less than 1% return. I just don't know what else to do, so I'm good. So what we're looking at here is it's a repositioning strategy. We're looking at saying we can take that money, we can reposition it to another place where we can still preserve many of the things we like about it. We can preserve the safety of principal. We can preserve the liquidity. But then what we're doing with those dollars is it's to say, what if we could do those things for you? Keep liquidity, keep principal secure. What if we could make those dollars do more for you? What if we could get those dollars to give you a little bit better inflation hedge? What if we could do it in a way where you didn't have any downside participation risk in the market? So there's basically four things here we're going to be looking at. Number one, we're repositioning money here into an IUL product. So we're going to, because it's an index product, the clients are going to have the ability to participate in the indexes or when the market goes up, but there's downside protection so you don't lose money in the periods the market's down. So we are going to jump at it in a minute, and we're going to talk about costs, because I know many of you may be thinking, or you've heard, or you've read the articles, that, hey, life insurance is a crappy investment, too expensive, we shouldn't do that. Well, you know what? We're going to give you the numbers. We're going to dispel that myth in a minute or two. So the question, Mr. Klein, Mrs. Klein, what if we could show you a way, if there was a strategy to participate in the up days and never lose money on the down days in the market? Would you be intrigued to know how? That's what we're talking about here. Then what about taxes? This is a tax-deferred place where we're going to grow the money on a tax-deferred basis. Now, I could have already presented a case in the beginning of the year prior to this COVID world that taxes probably have to go up with the blossoming debt that we have, with our entitlement mentality where we're giving a lot of money out to people. You add now the billions and trillions of dollars that we're distributing just to keep things going. It's a pretty, it's a conservative thought to think we're probably going to have to raise taxes in the future to pay for all this stuff. So being in a place now in a tax-deferred environment really is a plus. Okay, the next thing, the next leg on the stool is liquidity. We have a place where, as Troy said, if you want full liquidity, we have a waiver of surrender charge rider where at the end of year one, you have 100% liquidity. You get your money out with no deferred or surrender charge to get out. Okay, the third thing is going to be health issues. There is a 100, and I shouldn't say 100, there's a 100% of the death benefit is available for acceleration for critical and chronic. Chronic's long-term care. The definitions here will be similar to what you're used to. It's the inability to perform your daily routine, the 2 of 6 activities of daily living, or a cognitive impairment. That's very common. So the death benefit can be accelerated here. But also critical illness. Now, I mentioned that before. Unfortunately, I saw my mom pass on an awful battle with cancer, and that kind of wiped out my parents. You've got a critical illness acceleration here too, so you can accelerate the death benefit. And then the fourth thing is going to be, hey, those kids that come around at Christmas, I kind of like them. So I kind of like to do something. Legacy is a cool idea in my mind, but I just don't want to give them the money yet. So if I don't need the money for my own living expenses now, if I don't need to accelerate the death benefit for health or issues like that, eventually I have a way to leverage the death benefit, passing to my heirs tax-free, and bypasses probate. So we've got, the Swiss Army knife is overly used, but we've got a way to do all those things for your client, and we're not locking you in going down any one path. We have total flexibility that you can pick how you want to use the product. So, hey, I want to show you a couple things on the illustration just to give you some numbers. This is a case study we wanted to share. We'll make it available to you. But before we do that, Troy, do you have any thoughts? Or Brad, do you have any comments? Would you guys like to make any additions?
I do not. I'm good.
Yeah, I had a couple, and then I'll let Brad chime in if he has any. You mentioned inflation too, Steve. That's one thing a lot of folks forget about. You look at the bank channel where a lot of our sales are coming from on this product and have been for many years is the bank CDs, the money market accounts. You look at, where I'm at, money market accounts, maybe 40, 50 basis points, regardless of the money you get in there. 5-year CDs are an all-time low right now. You look at, we just came out of April and October, the 2 largest CD renewal months in the year. So our business we had a lot of business this year on this product from bank CDs that had matured and are ready for renewal. The one thing people forget about is that inflation. So they see their annual statement and say, well, I got a point and a half this year. That's good. Well, you got 1099 on those gains because remember, this product's going to be tax deferred. So that bank channel product's getting taxed. But the biggest thing is inflation. Right now is at about 3.25%, 3.5%. That's one thing people forget about. You're actually losing money in those policies because it's getting eaten up by inflation. So you're losing what's called purchasing power. The other thing I wanted to mention is on this screen, and the ones we'll share with you today have the waiver of surrender charge option. Remember, that gives you the 100% liquidity. One thing to keep in mind, too, is this product performs very well even without that rider. Because remember, the product doesn't have a premium load. So you can actually leave the rider off. It affects commission a little bit as well. So you get paid a little bit more with it off. But also you're giving the client another great strategy, too, because usually in about year 4 or 5, you'll see the surrender value be a little bit higher starting out and increasing more when you don't put the waiver rider on, right? There's cost for everything. So just something to keep in mind is this product performs really, really well even without the waiver rider. And the other thing to mention is that middle column. We're very conservative North American, being a privately held company. That's one thing we're very proud of. But we dialed down this middle column to our minimum guarantee of 2.5%. Our fixed account right now is paying 3.5%. So you could leave that middle column at 3.5%. And remember, this is an IUL, but we also have that fixed account. So for folks that are on the call, or maybe you have some clients that really aren't comfortable with the IUL strategy yet, or maybe never will be, this could be used as a fixed product as well. So you could put that money in that fixed account too. Thanks, Steve.
Hey, great comments. Thanks, Troy. Hey, so take a look at the illustration. We'll send this to you. It's a little difficult on calls like this when you put illustrations on the page, but let me just point you to a couple places to show you how this works. This is a male age 60. We ran preferred non-smoke, so we ran one class off the best. We were using $250,000 as a single premium going in. We can use this product with either a single premium or an ongoing premium, but in this illustration, with the smart money, we're using it as a single premium asset repositioning transfer. So $250,000. We're searching for the minimum amount of death benefit because we want to maximize what the policy will do for growth of the cash. When you minimize the death benefit, you're minimizing the policy charges. We're running this as a modified endowment contract or a MEC. What that really just means is we're taking the death benefit a little lower and we're going to be taxed like an annuity. So, a lot of the things we do with life insurance is growing the money tax deferred, tax-free distributions. It would make you buy a little bit more death benefit. In this scenario here, we care more about the lower death benefit. We're giving up the tax-free income, but we're taxed like an annuity. So this is really a companion annuity sale. This might be where you might look at an annuity or think this is a great companion to it. So if you take a look here in year one, on that left-hand column, we're putting in the 250, and then you see the guaranteed column. At the end of year one, you have a guaranteed surrender value of $250,099, and you see your death benefit. So at the end of year one, if you're like, look, I'm out of here, I want my money, you can show the clients that they have guaranteed return of their premium at end of year one. And then if the more likely scenario was the non-guaranteed, and as Troy said, we have a 2.5% minimum account value. The 5.41 is the current rate we're crediting. We can make that as upper, lower if you want to be conservative. The numbers still look good. And you see there at the end of year one, there's a surrender value of $258,000, and there's a death benefit of $600. The $600 death benefit is what we have available to accelerate for the health issues, the critical and chronic. So again, just to summarize, we've got that client's money. We're moving it to a new place for them. They're going to capture upside gains in the market. They're not going to be participating in the period the market goes down. We have guaranteed liquidity at the end of the first year. We can give them their money back, and you have those values for legacy and death benefit and future cash value should they need it. So, hey, Troy, why don't you go to the next page?
Real quick, before I do that, I'll add, because I really like this next page and how you talk about that. But the far left column, just so we understand the far left column, and I'll talk about those two columns really quickly. The far left column, folks, is your true minimum guarantee. That's assuming two things. Number one, the market don't perform, we get a 2.5%. Because remember, our products have a guaranteed rate of return of 2.5%. But mainly, that is also saying that us at North American, every year, we're going to raise our cost of insurance to our contractual maximum that we can. Okay, I can tell you right now, we've gone back 48 years even on paper, and have not found one instance where us as a company has ever raised a policyholder's cost of insurance on any product. So the far left column is very unlikely to ever happen. So where you really want to concentrate on this sale is the middle column. Like with this one, we were very conservative. We went down to our minimum guarantee and not raising the cost of insurance, which we've never done. Okay, so the middle column, we always say this product's probably going to perform somewhere in that middle column, the far right column. It's kind of where that middle column really is the true sale in this policy and has been for many years. So thanks, Steve.
Hey, great comment. Hey, and folks, beyond the scope of what we have time for now, if anyone is interested in the financials, the ratings, the assets of North American, we are a privately held company. We are positioned extremely well right now. So going into this environment, there's headwinds obviously for everybody, but we are positioned extremely well. So you can count on us today and more importantly tomorrow. So let's go head on the numbers. Let's go back to, how I said a minute ago, hey, I don't know about that life insurance. It's too expensive. It's a lousy place to put money for growth purposes. Well, I'm sure some of you use the internal rate of return page in the illustration. If you don't, I would encourage you to look at it. This is a phenomenal way to quantify what the returns are in this as a pure asset. So what we're doing here is we're running this as a male 60, $250,000 going in. we're buying that $600,000 death benefit. So I wanted you to see here, I'm focusing more on the internal rate of return on cash value or surrender value. So just to help you with the numbers, at the end of year one, the internal rate of return on the surrender value is 3.6%. And I know you guys, you're math folks. We don't have to explain what cash values and all that stuff is. You guys can teach me what that stuff is. But let's quantify this. Okay, 360. Is that good or bad? We're crediting 5.41 on the illustration. So if you take the 541 and subtract the rate of return, isn't that our effective cost? Or that's the drag. That's our give up because of the insurance charges. So 541 minus 360 is 1.81. So the all-in effective cost at year one is 1.8% or 181 basis points. If you go down to year 20, it's 3.49. And then if you do the math, it's 192 basis points. I love to put this in terms of the taxable equivalent requirement or the taxable equivalent yield. These are tax-deferred numbers. So to produce 360 in a taxable vehicle, you would have to earn 4.74% in a 24% bracket. So we can do the math there for you. The one comment I'll make is we'll use either these products as a lump sum single premium in this context, or often if you have those clients that are 40, 50, 55, you probably also see working with Core, you'll run an ongoing premium. You may see a client that says, look, I've maxed up my qualified plan, or I don't have one. I've got some extra money. I'd like to do some saving for my future. I'm going to put X numbers of dollars aside from 40 to 60. And then I'd like to have some income potential later on. When we run those, when we spread the premium payments out more, you actually get a little bit less death benefit and a little more efficiency. So if you do any of those kinds of plan designs, we'd love to show you the internal rate of return page as well, because it's usually less than 1%, less than 100 basis points for all-in costs. So then if we start to go head-to-head on what does it cost to put money in a balanced portfolio, assets under management, the AUM fee usually per year is usually maybe 1%, 1.25%. So we can show you how on other funding structures that the life insurance from a cost perspective is actually less than traditional investing. So why don't we take that? If anybody has questions, we can talk to you one-on-one after. Let us know.
And another thing to mention too, Steve, when you talk to qualified plans, is a lot of these people have maxed out the qualified plans, so they're putting in life insurance. And even this product and any product is there's, the 70.5 RMDs. You don't have to, on this product, you don't have to start taking RMDs on it when you reach 70.5. So that's another talking point I know a lot of advisors use too with this concept.
Hey, great comment. Thanks. Hey, so one of the sheets we'll make available to you after is we have a client profile for the smart money sale. So this page here that gives the client profile, we have a sheet we'll make available to you as well. So the next idea we were going to touch on where this is very applicable is business planning. We're probably not going to spend a lot of time talking about business planning today, but in the business market, if you're doing work with clients, you may be doing buy-sell planning. You may be doing non-qualified benefits for the key people or owners. You may be doing deferred compensation. This product is a high early cash value product. And with the waiver of surrender charge, we can show full liquidity in year one. So the seed that I will plant with you today is if you're doing any kind of business insurance planning with your business clients, this works extremely well because the CFO will like this as an asset on the books. So I think we'll tap the brakes on talking about too much business planning right now, because I think in the current environment we're in, many of your business clients may not be saying, hey, where can I put some extra money? They're probably just saying, how do I keep the lights on and keep this thing going? So just know when we get to probably back to a little bit more normal, we have a really good strategy for business clients. So, hey, Troy, can you touch on PDA for a second? I think that's the thing that's more universal.
That's a good question. Let's bring that up a little bit. Like Steve said, the business planning probably is not the best time with the current environment where we're all in, given late April 2020 here. But one thing we did on this scenario from a business perspective is we funded this into what's called a premium deposit account, premium deposit agreement. This is available on all of our IUL products. This is a way to get money into a product via, you can pay for it day one, right? So these large single premiums, this one, we had a single premium about $60,000, actually more than that, $550,000, let's say. So instead of putting that $550,000 into the product right away, we can actually put it into the premium deposit agreement, and then you can see that'll funnel with interest. It's 3.25% interest right now, and that's guaranteed. So the PDA you can do anywhere from 3 to 10 years. So again, you give North American the big check of $500,000, and then either for 3 years up to 10 years, that account automatically feeds that life insurance contract every year till it's liquidated. You choose 3 to 10 years, and you're getting 3.25% guaranteed once you lock in that PDA. Right now, where else are you going to get that? Okay, so you're buying that life insurance today, but it's slowly putting that money into the policy. Okay, a lot of the times in that scenario, we can keep that death benefit lower because we're not putting that huge lump sum into a product. So that PDA is available on all of our contracts, Builder Plus 2, the Protection Builder, and also the Smart Builder. And then we also have this page that I have on the screen that kind of shows the number thing, saying, hey, what are we getting for interest and what is the value on it? So that's a neat page that comes out, the PDA. And you don't have to individually run that. We automatically include that. So anything I missed there, Steve, let me know.
That's good. Thank you.
But I think if you want, I can continue with the next concept, the policy review.
Please.
Unless you had anything to add. This is probably one of our top 3 concepts that Steve and I are talking right now is policy review, client review. We have a really good sales concept we can send out to help you with it. What we're looking at here is all these old policies. If you're doing, picture a scenario, you're sitting down talking to the client, doing an annual review, doing what you do, and the next question maybe is, hey, by the way, do you have life insurance? A lot of the times they'll say no. A lot of times they'll say yes. Maybe it's 60-40. Maybe it's 70-30. We know America is really uninsured right now. The question is, do you have it? Number one, yes, great. Hey, do you have the new or the old life insurance? Every time they're going to say, well, what do you mean? I have an old policy, but what do you mean by new? Well, we can upgrade these policies. Now we'll talk about this, but we can get a lot higher death benefit, but mainly we get living benefits. Okay, the CCT, right? Critical, chronic, terminal. So when we're doing policy review on some of this old life insurance, day one, we put living benefits on that. Okay, this product, we've got that leverage, the power of zero, right? Zero's our hero. At North American, we've actually got the 2.5% minimum guarantee. Okay, and then we've got the liquidity. Whether you choose the waiver rider or whether or not, you've got very high liquidity compared to any product right now in the industry. So one of the examples here is we'll have 55-year-old male, and he has a variable of VUL, and I'll pull up the illustration here in a little bit. So this guy, he's not looking at taking on more risk, right? This is an old VUL policy. It's up for, he can take it. There's no surrender charges anymore, but he's got some nice cash in there that we know from life to life. We call that a 1035. He likes the idea of an IUL. Again, the big thing is he doesn't want to start over a surrender charge. So what we did here was we put the waiver rider on it, and we've got a $200,000 lump sum. Again, this guy, 55, we went super preferred on this scenario. Remember, we go all the way from super preferred down to standard and table ratings. This one, he was a healthier client, so we're able to run in this scenario. We've got the 200,000 going in. And I won't spend too much time. Steve did a really good job talking about the columns and the amount of insurance we're buying, but look at the leveraging this guy's got on that old VUL policy. He put the 200,000 in day one. He's got a death benefit of over $680,000. Okay. If we had the IR report on that, that would look as well as the one Steve ran earlier for us. So that's the leveraging. In that middle column, you've got 200,000, 592 guaranteed. If you'd have put it in the fixed account, we'd even have more than that because remember, that's 3.5%. So we actually dialed that one down a little bit as well. So when you think about the client review, the questions asked, does he or she have an older policy? Okay. Do they have the old life insurance compared to the new? Have they become more risk adverse? Probably, right? As they get older, they don't want to start over the surrender charges, nor do they want to really 100% participate in any market performance where the IULs, you can participate, but you also have that protection, right? The floor. And then we have access to the accelerated death benefits. Critical, that's your cancer, your heart attack, strokes. Chronic is your living benefit for your ADL. So if you can't perform 2 out of 6 activities of daily living. Okay, and remember, our living benefits, they're not a reimbursement. They're an indemnity, so we pay for up front. All you got to prove is a physician certification on those. So you're not going into a nursing home for 6 months and then reimbursing you. You're getting your money quick when you need it. And then also looking for free up, the cash flow in retirement. These products, all the IULs are very, very There's a lot of variability in the back end as far as taking withdrawals and loans, a lot of flexibility, I should say. So a lot of really neat stuff on an IUL where we're benefiting the client day one of, moving some of those old policies that may be underperforming.
Hey, Troy,
so,
let me jump in for a
ahead,
second. I think you teed up the policy and client review extremely well. I just want to, keep it simple. The usable things you can take with you here. The question Troy mentioned, one simple thing. Hey, do you have insurance? Yes. Do you have the old kind or the new kind? What are they going to say? They're probably going to say, I have no idea. What is the difference? The difference is with the new kind of life insurance, you have living benefits. You have the ability to have money that grows without downside risk. You have the ability to have tax control. You have the ability to have an accelerated death benefit to get money out while you're alive. So that's the first thing. The next thing is, as Troy mentioned, a lot of old life policies had surrender charge periods of 10 or 15 years. If you said to a client, hey, do you have life insurance? Maybe we can get you something different that's better. They're probably going to say, oh, God, you know what? I've had that thing for about 14, 15 years. I finally got it out of surrender charges. I don't want to go back to a new place with surrender charges. So with the Smart Builder product, with that waiver of surrender charge option on that illustration page that Troy had, end of year one, fully liquid. So we've removed one of the hurdles, one of the objections to moving this forward. So in today's world, some of you are probably doing policy reviews with all your clients already. I would encourage you, especially right now with our social distancing, it's probably harder to go out and see new people. So what I would just encourage you is, if you're doing it, keep doing it. If you're not doing it, then I would just ask the clients, and when they have policies, come to your core team, come to Troy and me. We can help you make sense of what they've got. So
hey guys,
Troy, let me hand it back to you.
Guys, this is Brad. Please. Can I jump in here for a second?
Please.
Core has a defined process for policy reviews. We have been doing policy reviews for years. We have a complete marketing platform on policy reviews called It's As Easy as 1, 2, 3. Direct mailers, postcards, handouts. There's been numerous improvements in life policies over the years. Underwriting improvements, COI improvements. Old whole life policies that are just flush with cash. I cannot tell you how many opportunities are out there to do policy reviews. It's probably your number one revenue generator in the market today, bar none. That's all I have, guys.
Oh, awesome. Thank you.
Well said. Well said. And then one thing, Steve mentioned where we're at right now, and we've had this, what I have on the screen, this is probably one of the biggest takeaways, hopefully you take away, is the simplicity and the ease of doing business, especially given the current circumstances where we're at. But the right-of-way underwriting, that's a simplified underwriting platform that if clients fit the certain parameters, age and death benefit amounts, we can streamline it. You can do an online app, you could do a paper app, and if they fit, they can go through the right-of-way process, which is an online part too. So you don't have to see the client right now in this digital experience, if you will. And that's also available on our Simple Submit. So you submit the app, client gets, it's not even a phone call anymore. The client gets emailed the part 2 of the application. So they could, do that health questionnaire at their own convenience. So in summary, and Steve, you can kind of help me wrap it up, but in summary, hopefully we brought a couple things to you. Number one, the exciting new product. We just launched this year, the Smart Builder. We gave you 3 impactful sales ideas. Keep in mind when, everything's done with the COVID-19 where we're at, that business solutions, even though we didn't spend much time on it today because businesses are kind of in a hurt right now, don't forget that one. There's huge potential with those key person sales. And then hopefully when we'll share this with you as a team, and Brad even mentioned the tools they have at Core, we all want to combine, really help make everybody more money on this sale, and more importantly, have a solution for the client. Steve, I'll let you do the bottom line, and I'll shut up.
Hey, Troy, let me give the group, just maybe think about the next steps, how we put this in motion. If you can take a look, I think we've got some questions on the chat box. Maybe you can take a look at those when I get through this. But okay, next steps. We've got a great actionable opportunity. Your clients need you more than ever before. I would start with some simple, basic questions. I would ask those clients, and you probably know much about them already, but do you have those sideline assets? Do you have a plan to be dealing with the market these days? Do you have a plan to take care of your health and your long-term care needs? If you start the conversation on that, you're going to uncover those sideline assets. I think that some of those dollars that are in those liquid places right now, the client doesn't want to move them for all the reasons we've talked about. I think this is a place where they may be willing to do something with those dollars. Then in addition to that, the policy review, Core has great materials that you can use. We have supplemental materials, but I would use Core Resources as your primary go-to. We can help with that. And then Troy touched briefly on the right-of-way, basically just simple process. We know if we can simplify your life, not a lot of paper. Right now, we can use a paperless e-app. We have an accelerated process right now where we're seeing about half of our cases accelerate without exams and fluids going out the door in about 6 days. We're making adjustments in the current COVID environment to do other different creative things to not need exams and fluids and get information in other places. So a follow-up item, really not appropriate to go that deep now, but just know we've got ways that you can still do business when you don't have the ability to go see people, and we'll still get cases through. So, hey, Troy, let me hand it back to you if there's some questions over there.
Yeah, there are a couple. Thanks, Steve. A few questions popped up. Is the fixed account rate guaranteed for the life of the policy? The fixed account right now is at 3.5%. That is guaranteed for the first 12 months of the policy. It can never go lower than what we illustrated at the middle column at 2.5%. So that's the minimum guarantee. And that's why we do a lot of these sales on that middle column is, hey, we can show them 3.5%, but that's for the first year, best case scenario, right? And we haven't lowered the fixed accounts in quite some time. So I'm not by any means saying we're gonna play the game and give them 3.5 and then year 2 lower it. We don't do that. That's nothing we've done in the past. But what we've done even more conservatively is we've dialed it already down for you. You see the quotes that Steve and I shared with you today. We dialed that middle column down to 2.5%. We said, hey, here is literally your worst case scenario, far left column and middle column. So currently 3.5 guaranteed for the first 12 months. And those are only two I see that come in, unless I'm missing anything there, Brad. But
yep. I think that's it. Okay. Hey, Brad, any additional comments? I think, we've covered what we had, and I hope everybody got something out of this. We would love to assist you. If you have specific client situations, we would love to think of us as part of the core team. We'll help you with case design. The core group is well-versed in this as well. So maybe next step is pick 3 clients that look intriguing to you. We can help you to design the solutions. We can answer your questions, whatever you guys need. So thank you, Brad. I'll turn it back to you.
The only thing I'd emphasize is the CD opportunity. How many clients do you have currently sitting in CDs? The guaranteed account value at 2.5%, just that rate of return, and then you're leveraging the death benefit with critical illness. It's unbeatable. I mean, it really is. If you guys need any illustrations run, if you have some cases you want us to review, like I said, we have a complete defined process for that. Contact your relationship manager. You can reach out to Core. You can reach out to me, 877-738-0294. I want to thank Troy and Steve. You guys did a fantastic job. Thank you so much.
Thank you all.
Thank you,
Have a great day, everyone.
Thank you.